If you've been watching the crypto markets this weekend, then you'll know it's been an interesting one, especially for altcoins. While Bitcoin has been doing its own thing, ranging between about 117 to 118K, that sideways movement has actually created some fantastic opportunities for altcoins to really stretch their legs and make some significant moves. Now, later in this video, I'm going to dive deep into exactly why Bitcoin is currently ranging and crucially what this means for the week ahead and how you can position yourself. A huge factor driving this overall positive sentiment in the market is the increasingly pro-crypto sentiment coming from the Trump administration. And coupled with that, we're seeing massive institutional adoption with the continued success and growing popularity of both Bitcoin and Ethereum ETFs. These exchange-traded funds are making it easier than ever for big money and retail investors alike to get exposure to digital assets, and that influx of capital is clearly impacting the market dynamics. In this article here, we can see that US-listed spot Bitcoin exchange-traded funds have crossed a major milestone, surpassing $50 billion in total net inflows, a signal that Bitcoin's institutional adoption is accelerating. Now, I'm going to cover Ethereum's price action a little later in this video, but before I do, please do hit that like button and subscribe to the channel. It really helps us bring more content like this to more people who need to hear it. But for now, let's jump into the charts and talk about Bitcoin's price action first, being the mother of all crypto. Starting on the weekly time frame, being a Sunday, we need to discuss how the weekly candle is looking to close. Now, at the time of filming this video, Bitcoin is sitting at around $118,000. We do have this big liquidation zone sitting where price is now, just to around the $120,000 mark. We are looking to definitely close, although anything can happen. There is still 12 hours to go, but we are looking like we will close a new weekly candle all-time high. Going down to the daily time frame, and we can see here that we had two key levels last week that we really needed to break. The first one was the prior weekly candle close high. And then once we broke through that, the next level became the daily candle close high. We have broken through both of those levels. And I guess the next question is going to be whether or not we will eventually retest them or not. Now, besides the 120K liquidity zone, we do have another pocket below price currently at about 103.5 to 105.5. That could be an eventual retest. If we did come back down that low, it would still create a higher low anyway. It would still be long-term macro bullish. Further beyond the 120, we still have a big zone between 123 and 131. When I have a look at the daily candles, the break that took us beyond this daily candle close high came in 3 colored vectors. And that means that there's going to be an imbalance in this zone now. So it is possible that we retest before continued upside. I wouldn't bank on it right now because when things are parabolic, you don't always get a retest. However, best case scenario for people looking to load up on positions or get in if you're out completely, these 3 candles here on the daily time frame are going to be the areas where you're looking for retests because they will line up with EMAs eventually if we do get a pullback, and they will retest these key areas that I spoke about earlier. But I want to go down to lower time frames to check the likelihood of that. So let's have a look at Bitcoin on the 4-hour time frame. Now, this was a tricky time frame actually during the week because in our consolidation after our prior 3-level rises, so you can see the W formation here, and that led to 3 levels of rises with an extension. And that meant that this whole choppy range here, we were looking for 3 hits to the downside to signal that that downside move was over, and that we usually expect that to happen in 3s as well. Now, what you can see here is that it only happened in 2s. And that is actually a signal when you only get a reversal or a pullback that only gives you 2 levels. That is reminiscent of a very strong trend, which means a strong trend to the upside. And it's really only relevant when the level 2 drop tests a key macro level. So if we mark the bottom of that level 2 drop, you can see here it was the prior resistance. So that's what made it a very key level, and where we keep an eye out for a potential level 3 drop, but we shouldn't bank on it. So this is where we got long positions in in the TTC community. I've spoken about that on prior videos, so I won't go over it again. But the second chance entry after that was when we tapped into this liquidity zone around 105. That's where a lot of other community members went long. And then the third chance entry actually was this consolidation here, when within the consolidation, we had a W formation that respected the 50 EMA. So there was actually many chances to go long on this in anticipation of a breakout, knowing that we were still at risk because at any point we could reject this level right here and actually get our level 3 drop. So nothing was for certain. Of course, that's how it is with price action. Nothing is ever for certain. You just have to do your analysis, make your decision, and practice good risk management in the event that you were wrong, which we can always be wrong. So following on from that entry, we have pushed up and we are now kind of ranging, which you can see better on the 1 hour time frame. And this is where I briefly explained on my last video a trade called a 33 trade. Now, I am more convinced since doing that last video that that is what we have going on. The reason is because after the 33 trade, which is basically this level 1, level 2, level 3, and then 3 hits to the high in the level 3, that's a very terrible explanation of it, but it is a complicated trade setup. So too detailed for YouTube basically. But the moral of the story is that after this part happens, you range for a long period of time. So the fact that it happened on a Friday and knowing that Friday leads into the weekend trap is sideways price action, and couple that with the 33 trade where the sideways price action goes on for an extended period of time. Actually, a funny story. I was talking about this price action with Pedro and I was saying to him that based on that trading method, the price should go sideways for an extended period of time. And Pedro said, yeah, the whole summer. And I started laughing because the difference between a day trader like myself and a macro trader like Pedro is that an extended period of time for someone like him is a few months, whereas an extended period of time for a day trader like me is a few days. So I was like, oh, okay, we both think sideways, but we're thinking sideways on very different time frames right now. So back to the actual strategy, the extended period of time would be a few days in this particular strategy. Now, what should follow that if this does end up completing as the 33 trade is a return to the 200 EMA. So that would actually require a pullback for Bitcoin. Now, I don't think this is a problem because, like I said to you earlier, altcoins have massively run this weekend. Let's take a look at XLM, for example. This has done a massive run this weekend. And if you didn't see it coming, which by the way, if you watch Pedro's videos on this channel, you would have seen it coming because he gave this call at 22 cents. And this thing is still flying. But in addition to this, we've also had other things flying this weekend. Curve is another one of Pedro's calls, and it's just taking out all its liquidity to the upside. All of these lines that you're seeing on my chart, I put these here on Friday so that I know where the liquidity is before the weekend. So the fact that we've moved up and taken it all means we've taken out everyone who went short during the week last week. So at this peak formation right here. So that was another one of Pedro's brilliant calls, and HBAR as well. That's just been crazy. Again, look how it's taken out all of the weekend liquidity. So this is happening because Bitcoin is ranging sideways. It's actually been a perfect weekend to trade. Now, I often say that you should take weekends off trading, not for any reason other than it's usually not a high volume period of time. So to get some rest and relaxation and reset yourself so that when the week comes and the market opens, you are fresh and ready to trade and you think with a clearer mind, it's better to take that time to step away when the volume is lower than any other time during the week where you may miss a trading opportunity. But there are times when the weekend will give you really good trades. And this was one of those weekends. So if you actually understand the 33 trade, you would have been able to preempt that it was likely alts were going to move this weekend because you would be anticipating Bitcoin to go sideways. And that's exactly what happened in the Discord this week. I gave this notice to my community where I said there is potential for this weekend to be an altcoin weekend. And my reasons for saying that was because Bitcoin was going sideways at the end of our 33 trade setup idea. Retail and influencers are overhyped on social media that their alts are finally moving. The funny thing about this was when Bitcoin was breaking into a new all-time high, no one was really all that excited. But as soon as the alts started moving, that's when the hype started. So it just goes to show you, if Bitcoin creating new all-time highs isn't exciting people, they're not all that exposed to Bitcoin, and they're probably too heavily exposed to altcoins, which is why we saw this emotion on social media when the alts started to break out. I also said the funding rates are low, even with Bitcoin Delta being high. I'll get to that. And the dominances and totals are looking great for alts. I covered that on the last video. And lots of alts on lower timeframes are building typical retail patterns like flags and triangles. And then I gave some examples of some trades to have a look at, one of them being HBAR, which is now doing incredible things. If you want to learn how to navigate these markets yourself, how to identify these ranges, and how to execute profitable trades, then you need to consider joining us at Trade Travel Chill. We're not just about trade signals, we're about empowering you with the knowledge and the skills to become a self-sufficient trader. Our website, tradetravelchill.club, has all of the details. We offer comprehensive courses and multiple live sessions daily, where you can learn directly from experienced traders, and our exclusive private Discord channels where you can connect with a supportive community and get real-time trade updates. We also have a 48-hour money-back guarantee, so you can try us out risk-free, and we also have monthly and annual membership options, along with the ability to pay in crypto if you wish. Check us out at tradetravelchill.club. The link is in the description of this video. Now, speaking of alts moving over the weekend, let's talk about Ethereum, because Ethereum has absolutely been crushing it. Spot Ethereum ETFs are seeing record inflows, pulling in over 900 million this week alone. This is their highest weekly performance since launch, underscoring just how much institutional demand there is for ETH. And it's not just ETFs. We've got major players making big moves. BTC Digital, for example, has announced a significant investment in Ethereum, calling it their new digital gold. They've shifted their entire treasury to ETH, accumulating over 100,000 ETH, making them one of the largest corporate holders of Ethereum globally. This is a massive vote of confidence in Ethereum's long-term potential and its role in the decentralized financial ecosystem. So let's go and discuss the Ethereum price chart then. I want to first have a look at ETH BTC, because this is what we need to break out in order to have confidence in Ethereum. And you can see here that we got the exact retest that we've been talking about on this channel. Ethereum was ranging for a long period of time. I remained bullish on that because that range was happening after a rise level 1. So all we were waiting for was either a breakout of the range or a retest of one of these two vector candles, with the one being highlighted was my preference, before breaking out again. So we do have that retest. We've broken out. The only unfortunate thing about ETH BTC right now is that even though it broke out after that retest, it has not yet broken this resistance at around 0.025. So what we really need to see now is ETH get above that level. Then we're going to feel a little bit better. For now, you would say that it's still actually stuck in its range. A good hint that it's going to break out next might be if we get a higher low within the range. And the reason why I say that is because now we've got these EMAs that are pointing up like this. So as long as they keep trending like that and price can potentially come back to retest them, that higher lows where you will get your confidence that it's going to actually break, really need to see it get above this 200 EMA here. I am on the daily time frame. So you can see that when we zoom out, that 200 EMA has been a very strong resistance for ETH BTC for a very long time. In fact, all the way back since July 2024. So we really, if we're going to have a sustained alt season, as they call it, we want to see this happen. So yeah, again, even though alts are running this weekend, I wouldn't get too excited until ETH BTC actually really does change the trend. Until then, I think that trading alts, having a clear take profit is fine, but just buying alts thinking that they're going to 100x, it's still in the, it's in the danger water for me until I can see something like this happen. When you just trade them and you have your clear take profit levels, you don't have to worry. You can take your profits at your levels, let price pullback, get back in. You don't have to worry about giving away your capital and then it drops even lower and then you have to hope that you have a pump just to get back to your entry price. That's not optimal in my opinion. What's optimal is understanding market structure and trading when the market structure changes, having your clear areas to get out, banking your profits, resetting and going again. So now that we know the ETH BTC chart, let's have a look at ETH USDT, because again, this was the highlighters for us and price did come back and retest that zone perfectly. It's looking better than ETH BTC because it has broken the prior resistance. But again, I want to see them both break to be even happier about this new trend or have even more confidence that this is going to be a new sustained trend, because whilst ETH BTC is at its resistance, there is a chance of rejection. So that is the most important thing to happen now. But ETH USDT is looking okay. It's coming up to recover this vector candle right here. And so it's literally in its area of interest right now, and it's around about the halfway mark of that candle. So look, even if we had a bit of a pullback, as long as it maintains these EMAs, you can still be bullish on Ethereum. You're really just waiting for a higher low to confirm it. We've got the initial breakout. We need the higher low to confirm it. Now, when you have a look at ETH's weekend range, it's similar to Bitcoin. Over the weekend, it's actually been in a weekend trap. It's been going sideways, but it's also been holding its 50 EMA, which is, it's good and it's bullish. All of these lines that you're seeing are the liquidity below and above price. So essentially for me, if ETH is going to break out to the upside, then it needs to break the weekend trap. I would then expect that it's coming for this liquidity above price, with the highest, most dense area being around 3,080. If you're going to turn bearish on ETH, you would be waiting initially for it to break the 50 EMA on the 1 hour time frame, then break down below the weekend box, and only then you would start to look at this liquidity that it may come for next. This one would have my highest interest right here, sitting at about 2,800, because by the time price breaks down, that 2,800 is going to line up with ETH's 1 hour 200 EMA. So when we have the 33 trade on Bitcoin, and its target is the 1 hour 200 EMA. Looks like if it does break down, that target would also kind of align with Bitcoin as well. However, I just want to be clear, I'm not saying that I'm bearish on ETH and that I do think it's going to break down, because right now it's literally sideways. So I'm waiting to see, as long as it's above the 50 EMA, I'm going to stay bullish and look for signs that it's going to break out. However, I'm not taking new long trades there, just to be clear. It's just a signal for me to continue holding existing long trades. But if it does break down below the 50 EMA, then this will become my target. And while you're looking at these charts, if you're finding this analysis helpful, number one, smash that like button. But number two, you absolutely need to check out Bitget. They're running an exclusive offer for Trade Travel Chill viewers right now, but there are only 2 days left. You can get access to this special bonus package by using the link in the description of this video. There are bonuses for completing certain tasks. And not only that, when you join using that link in the description, you also get a 20% trading fee rebate for life. That is a massive saving over time. So don't miss out. Links to everything are in the description of this video. Now, looking ahead to next week, we have some crucial economic data that could impact the market. On Tuesday, we have CPI, which is the Consumer Price Index release. Now, this is a major inflation indicator. A higher than expected CPI could signal persistent inflation, potentially leading the Federal Reserve to maintain higher interest rates, which can be bearish for risk assets like crypto. Conversely, a lower CPI could suggest inflation is cooling, giving the Fed more room for rate cuts, which would generally be bullish for the market. And then on Wednesday, we have Producer Price Index data. This measures inflation from the perspective of producers. So similar to CPI, a higher PPI indicates inflationary pressures in the supply chain, which can eventually translate to higher consumer prices. And then wrapping up on Thursday, we have retail sales and unemployment claims. This gives us insight into consumer spending, key driver of economic growth. Strong retail sales could indicate a healthy economy, but if combined with high inflation, it could also push the Fed to be more hawkish. Unemployment claims are a real-time gauge of the labor market's health. A rising number of claims suggest a weakening job market, which could prompt the Fed to consider easing monetary policy. So remember, the Federal Reserve's stance on interest rates is heavily influenced by these economic indicators. While some market participants are pricing in potential rate cuts later in the year, the Fed has been cautious in stating they are waiting on the data to make further adjustments. Now, we've already seen that the US inflation figures have shown a slight uptick in June, and the Fed's latest projections still anticipate a higher core PCE inflation compared to their earlier estimates. This incoming data next week will be absolutely crucial in shaping market expectations and the Fed's next moves. So, this week, considering we have that formation happening on Bitcoin, I think it's going to be very crucial for you to understand where the liquidity is. And I also want to share with you where the current high-level buy and sell orders are. So let's look at the liquidity first. This is a 1 week liquidity, and we're looking for the highest pockets of color, essentially. So if you're new to this channel, let me just very quickly explain it to you. This here is the current price for Bitcoin, and you can see this big pocket of yellow up here. That's the major liquidation zone that I mentioned at the beginning of this video, around the 120K mark. And then below price, the major level is down here at about the 107, 106 kind of area. Okay, so they're the two major things, meaning if we had a big pullback, 106, 107 is still an area, although I personally think that's unlikely at this point in time. If the market structure changes and I start to believe that that is a level, I will certainly update you on that. But for now, I see other big pockets of liquidity. And what I feel like is that the reason that this is so high is because we did just have essentially, we just had smart traders that traded this range, felt bullish at this range, took long positions, and their liquidation levels are right under the range. And that's just normal. It's so far away from price that if we started to reject and head down, it's likely that these smart traders would take profit, or most of them, we hope, would do that. If not, maybe they need to watch this channel, but we would hope that they would take profit before we actually took out their liquidity. It would have to be something so fast, so strong, so bearish for us to come down there in such a fast movement that these people didn't have time to get out of their trades. Now that can happen, but that generally only happens when you have super high funding rates. And we don't actually have that right now. So if you go and have a look at the funding rates, they're very normal, which is kind of insane considering the weekend price action that we've had on alts. The funding rates are very normal. So usually when you have the huge liquidation hunt, I'm talking huge, those red candles that catch you by surprise, that comes with a combination of super high funding rates, super high open interest, and an extreme amount of leverage in the market. We don't have that. So I'm not expecting some massive, crazy kind of pullback. There may be some pullback, like I said, potentially to the 200 EMA, but the 200 EMA is at around 113K. It's this liquidity right here, this kind of pocket here. So yeah, we could pull back, we could take that out and then hopefully continue to the upside. We'd have to reassess if we did take this out sometime next week. After it's taken, we see a bounce. If that were to happen, we would remain bullish. But if we take this out and we don't get a strong bounce, we then have to think about a deeper pullback coming. So we don't have to worry about that now. We will worry about that if and when it happens. So with the current orders, these are the high level orders that we assume to be market maker algorithms because the number of orders are so large that it wouldn't make sense to be retail traders. So the highest level that we have that is closest to the current price but above it is sitting at 118,800. But I want to look for the actual highest number above price. And you can see here it's 1.63K at 120. So look, if Bitcoin can push up to 120 and these orders stay where they are, we know we've got a ton of liquidity there because I showed it to you. And B, we know we've got a ton of bears waiting to short at that area. So I would definitely expect resistance at around 120K should we get there. The other thing that can happen though, because all of this data is visible, what can happen is when Bitcoin is ranging like this for a very long period of time, that is the market maker accumulating positions. So it could be possible that they're accumulating right under the 120K to build up the momentum to smash right through it, in which case the market orders would be much larger, but that's not something you can see on heat maps. You can only see limit orders on heat maps because market orders get instantly filled. So you need to be watching order books at the time that the price. Anyway, I'm getting too complicated. Don't worry about it. The moral of the story is we can see that there are bears waiting at 120K, but we should not rule out that the market maker is currently building the momentum to absolutely destroy them. Look, that might mean if they are building enough momentum through here that they go straight through to take them out when the week opens, or it might mean that they have to come back, bring price down, get more of those buy the dip people involved. So we see the slight pullback, then they build that momentum to go through. Sometimes you can get a hint of what they're doing from the open interest. So we're having a look at the weekend range. You can see here that this fast spike, so this is the kind of spike I mean with a fast push through to the 120K. It would probably look like this. And you can see that that caused mass liquidations because the open interest is just a straight red candle to the downside. But since then, people have still been buying over the weekend. So the open interest is currently rising, and that may mean that the market makers are getting the participation that they need from retail in order to build their own positions. So we do have to be open to both things as the week opens. It's very even possible that there's a stop hunt up to the 120K before a rejection. That can happen at the end of the 33 trade. Whichever way we get the trigger on that trade, that is something I'm definitely going to be looking out for this week as the market opens inside of TTC, trading it together with the community.